You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back once again. It is Wednesday, time to roll out the futures fun. That is the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging. Just a reminder, make sure you subscribe to the full network wherever you get your favorite podcasts. That way you too can check out the sibling program to this one, This Week in Futures Options, so the options side of the futures market, coming at you every Thursday. Volatility views, the option block, crypto rundown. You might like crypto if you're into futures. All sorts of fun. Vol futures, can't get away from those. Volatility views, all sorts of fun. Make sure you subscribe to the full network. And of course, if you're ready to go pro, theoptionsinsider.com/pro. Awesome discussions on our pro Q&A this week. Options oddities coming up. And also coming up is the giveaway for our October pro trading crate. Make sure you get your name in the hat for that, listener. It's a good one. You want to make sure you win at least one of those in your trading career. We're supposed to be joined by Mr. Dan the Man Gramza on the show today, but I think all the action with the Fed has knocked him offline. He's having some technical issues. We'll see if we can get him on later in the program, but now it is time to keep on rolling right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we dive deep into what is trading out there in the futures markets this week. And in between our shows, in between Options Bootcamp and the Futures Rundown, we had Powell and company doing their thing, cutting rates 0.25% as expected out there. So that should make the day and indeed the week and indeed the show a little bit more interesting. Let's get into it now, listeners. To the upside we go. Let's keep things optimistic. Let's keep things hopeful. Let's keep things to the green. Let's see, what is lighting it up to the upside this week? Starting off at number 5, we've got our old pal, high-grade copper. You know, Precious has been stealing so much of the spotlight, so many of the headlines these days. No one's really talking copper. But you know what? High-grade copper making it onto our list this week. Up 5.41%. Getting base to kick things off this week. Number 4, out to the ags we go. It is hard red winter wheat, up 6 2/3%. Number 3, keeping it in the ags, soybean meal, up 7% exactly. Don't see that too often out there. Number 2, good old New York Harbor, aka heating oil out there, up 7.08%. And then, of course, keeping it in the complex that I cannot go to, dry whey, up 7.7% on the week. All right. To the downside we go, listeners. What was lighting it up in the red direction, perhaps in the wrong direction? if you're a bull out there this week, listeners. Let's find out, shall we? Number 5 to the downside this week. And again, if you're in on the consumables side, maybe it's a good week. Things getting a little cheaper out there, including our old pal, number 11, sugar, off 4.4%. Number 4, now this is where nat gas is coming in. We were talking about, of course, heating oil earlier at number 2 to the upside. This week, nat gas coming in off 5.5%, slotting in at number 4. To the dark side this week, feeder cattle. Maybe some of those steaks you've been eyeing in the butcher's case at the supermarket getting a little bit cheaper out there, off 7% this week, and keeping it in the consumables category. Coffee off 7.5% this week. So this week, your coffee and the sugar that goes into it, and perhaps even the sausage, if you're having some sort of beef product sausage on your breakfast table, all of that getting a little bit cheaper out there this week. Maybe you have a steak and eggs in the morning, in which case, hey, good for you. It's a hell of a breakfast. Getting a little bit cheaper this week. And then number 1 to the downside, dead trees coming back to earth a little bit this week, off 7.6%. All right, to the land of the most actives we go, listeners. And I mentioned it is Fed Day. So we expect a little bit of action, maybe not in the first half of the session. That's always the question with the Fed. Are people going to sit on their hands, keep their powder dry, and wait for the Fed to actually do something before they dive in and start trading? The answer today was actually no. Things are pretty active out there. Our barometer is always 300,000, and we are north of that. At least we were to kick off the show. I'm sure if I re-racked that now, that number would be even higher. We're at 324 for the number 10 spot. But you know what? We've got an interesting smattering of most actives today. So let's expand it to a top 15, because why not? Some of the names and products you folks like to trade in that top 15. Number 15 this week, we got soybeans. The only product I do believe on our list, the only product on our list this week, going all the way out to January, 206,000 Jan soybeans on the tape for number 15 this week. Number 14, keeping in the ags, corn. We don't see corn in the top 10 too often. Corn sneaking into the top 15 today. Deece corn. Everything else is Deece with the exception of one. I will point that out when we get there. Number 14, it's corn, 219,000 contracts. Number 13, a white hot contract. Is it white gold? Number 13, 233,000 contracts on the tape for the king of the shiny stuff, the lord of the metals complex out there. If you've been slinging a lot of gold, it's been on the wild ride, 50+% year to date in gold and giving some of that back up. Absolutely wild. Number 12, another product I know a lot of you like to sling out there. At the very least, watch. It's WTI, 237,000 contracts on the tape today. Number 11, now we're starting to get to some of the products you might expect on a Fed day. It's the 30-year as we head on into the rates. The 30-year, 253,000 contracts on the tape today, listeners. And then number 10, our usual line of demarcation. It's the Ultra 10-year, 324,000 contracts on the tape. Number 9, our sole November offender on the list. You'll see why in a second, because it's a 30-day Fed funds rate. What a surprise that would be in the top 10 on Fed day. 343,000 contracts. Coming in at the number 9 spot. Number 8, it's our old pal, the NASDAQ E-mini. 375,000 contracts on the tape for them. Number 7, 3-month SOFR. 420,000 contracts. Number 6, keeping it in the rates. A lot of rates, as you would expect today. The 2-year, 535,000 contracts on the tape. Number 5, back to the equities we go. The equity and rates battle continues for our top 10 and indeed our top 5. Number 5, it's the S&P 500 Micro, 602,000 contracts on the tape. What can supersede that? It's the 5-year note coming in at number 4, 776,000 contracts. Number 3, it's the S&P 500 E-mini, the big dog, 875,000 contracts on the tape there. Number 2, 10-year note falling to number 2, 1.27 million contracts. What can usurp that? In the past, the only product that's been able to do it has been the NASDAQ 100 Micro. Is that the case again today? The answer is yes. 1.34 million contracts. Again, that is a micro. So bear that in mind out there, listeners. But still, a pretty active stuff. Also, speaking of activity, if I re-racked the futures level right now, a lot more piling in, obviously post-Fed decision. Nearly 400,000 contracts is what the Ultra 10-year is up to right now. So 395,000 contracts. So about 70,000 more contracts going up since we started the show. So a pretty active day out there in the futures markets as we keep on rolling to the trends. What is lighting up our tape to the upside and the downside? Not this week, not today, but for the year, listeners. Again, let's keep it optimistic. Let's keep it positive. To the upside we go, listeners. Number 5, it's coffee. Yeah, getting cheaper this week, but still juicy, still pricey out there. Up 34.58% for the number 5 spot. Number 4, you knew it had to be here somewhere. Coming at number 4 this week, it's gold, up 45% year to date. Again, just say that out loud if you want to understand what a wild year this has been so far. Gold, the major bellwether for economies around the globe, up nearly 50%. People say Bitcoin is volatile and we shouldn't hold that as a reserve currency. Gold, Exhibit A, up 45% this year. Absolutely wild stuff. Number 3, to the upside, keeping it in the precious zone. It's palladium, up 54, almost 55% year to date. Number 2, talking about this last week on the show, silver stealing a march on gold a little bit these days, up 57.1% so far year to date. And then the king of the ring, the big dog out there, yet again keeping it in the metals. It's platinum, up about 71% year to date, listeners. If you're wondering, where's ETH on our list? Because our system's been having some fun with ETH of late. It's outside the top 5. It's up, looks like in the ballpark of 20%, which would put it probably in top 10, maybe top 15 territory. Of course, if we get a nice little rally again in ETH, all bets could be off as we go to the dark side now, listeners. What's been falling out of bed so far this year? To the Ags, we kick it off, number 5, hard red spring wheat. Say that 5 times fast, off 19.25% for the year. Number 4, you know it's been a rough year for rough rice. That continues, off 24.1%. Number 3, cocoa, off nearly 35% year to date. So then we talked before, maybe you want to swap your hot coffee to hot cocoa. I don't know if health-wise, if that's the best move. You're getting rid of some of the caffeine, but a whole heck of a lot of sugar. But hey, it's a lot cheaper right now, 35%. And then keeping it on our breakfast table theme. You know, the wheat's cheaper, so your toast is cheaper. How about some butter to spread on that toast? Number 2, cash-settled butter, off 40%, pretty much exactly year to date. And then, of course, you got to wash it all down. Maybe you don't want to drink that sugar-laden cocoa. How about OJ? Also some sugars in that, but hopefully of the natural variety. OJ off 56.2% out there so far year to date. So absolutely wild stuff. Looks like wild stuff continuing online as well, as our buddy Mr. Dan will not be able to join us. We'll get him back on the show next week. I know you folks love to pick his brain, but it's time for you folks to have your brains picked. It is time for the Futures Free-For-All.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-For-All.
All right, everybody, to the Futures Free-For-All we go. You folks can get at us at Options on most major social media platforms. I know it's not at Futures, it's at Options. It's most of what we talk about here on the network is Options, except for right now. And then, of course, questions at theoptionsinsider.com also works. If you're hanging out in the live, you can send your comments or questions. I know a lot of you were looking forward to Dan. We'll get him back. Dan's always a fun time here on the show. Blame the internet gods. Maybe Amazon Web Services took him out again. They took out the internet last week. Maybe they specifically took out Dan this week. But let's talk about some of the questions that you folks have and also the questions we ask you folks around this time. And a week ago, I mean, we're just coming off of the Federal Reserve decision, which makes this result even more interesting in hindsight, of course. We asked you folks last week, again, let's get away from the political for a second, just talk about the purely economic side of this. There's a debate right now about independence of the Federal Reserve and whether it should remain that way. Should the White House or of any administration have more say in Fed decisions, or should the Fed remain as independent as possible? Of course, caveat there, the Fed isn't truly independent. They are appointed by the administration, and certainly around nomination time, the rates tend to hold steady or fall. So there's certainly an argument about the degree of independence. But nonetheless, it strives to be independent. Should we keep it that way, or should the White House have more input in the Fed? And you folks came down overwhelmingly, nearly 90%, 89.5% last week, saying they want to keep the Fed as independent as possible. 10.5% say the White House, the administration, should have a little bit more input into Fed decisions. One of the stronger results we've had in a while in terms of unanimity from our audience, which is not always the case. On some of our flash polls, even this week, our audience has been pretty close to split 50-50, but not the case on that one. What about our question of the week this week? There were obviously equity index futures in our top 10 today, but we didn't get into the equity complex specifically too much because they weren't lighting up our tape for the week or indeed for the year. But that said, this was kind of raised in one of our pro conversations earlier this week, and it started us thinking about just relative valuation levels. You know, this is the thing that has concerned people for some time in the S&P, but one of the standard metrics for valuation is, of course, the PE ratio. Old school fundamental analysis, listeners. And, you know, the PE ratio for the S&P long-term average is somewhere around 15 to 16. People start to get a little concerned when it's north of 20. But we are well past 20 now. We blew past 30 in August, and by some measures, we are north of 31 right now in the S&P 500 PE ratio, which raises questions for a lot of people about what is going on from a valuation perspective out there. By the way, if you're wondering historical context, the last two times we were at levels around this in the PE of the S&P, the great financial crisis, although some of that could have been finagled by very low earnings numbers as well, which happens during the great financial crisis. And then also the dot-com bubble, another time that springs to mind. So not two great precedents if you're trying to make the bear, or I should say the bullish case out there, listeners. And so we asked you folks, do these lofty PE ratios in the S&P 500, do they concern you? We gave you four choices. Yes, this is crazy. Or no, who cares about PE? Or no, AI changes the game, which is an argument some people have in increasing productivity and everything else like that. Or maybe you're concerned, but you know what? You're going to grin and bear it. You're going to whistle past the graveyard because that trade has been working for a while now. And right now, listeners, again, talking about strong response from our audience, 56.3% right now coming down on, man, this is crazy. These PE levels are astronomical, and it does give them, obviously, a fair amount of concern. We have a tie for about 19% each for no, who cares about PE? And also no, AI changes the game. So obviously, you add those two together, listeners, 38%, so well shy of the over half we have voting for yes, this is crazy. And then 6.3%, maybe you're a little bit concerned, but you know what? You're whistling past the graveyard, and so far it's been working. I guess you keep hoping and keep whistling, listeners. All right, that's going to do it for our Just the Facts Dan-less episode of the Futures Rundown. Don't worry, we'll get Dan the Man back to weigh in on the Fed and all this market action and everything else out here on next week's episode, and all sorts of fun coming up soon. Speaking of coming up soon, if you're hanging out in the Pro, just hang out. We'll be back after the closing bell today to break down all of the action in the options market. Was it a wild day on Fed Day? Well, got to tune into the Hot Options Report after the closing bell to find out. Yet another reason why you should be subscribed to the full network out there, listeners. Then we're back again tomorrow with the Option Block and indeed the sibling program to the Futures Rundown, aka TWIFO, this week in Futures Options. Then we do it all again on Friday for Volatility Views. If you like VIX and Vol Futures and term structures and contango, I got to imagine you like those terms if you're listening to a show about futures. You should be checking out Volatility Views. Then we're back again next week, all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.